Well, guys, I woke up this morning and I saw our Moomoo portfolio is now officially in the red. So our total position profit and loss is -$2, and we can really thank one stock. So I went and checked my watch list and I saw Perion Network. Of course, it's them. They're down 28%. So if we look at all our stocks over here, we're now down 65% on them, or $209 just on the day. I'll go ahead and show you the individual chart. I'm always transparent on this channel. I always give updates on all my winners and my losers, and this one is one of my biggest losers, and I want to give some words of wisdom. And I would never want any of you guys to have this kind of L, and I want to tell you, in my opinion, how you can avoid it. Hashtag not financial advice. It's to stay away from the small caps. That means the stocks under like a $3 billion market cap, and you also stay away from the stocks that are unprofitable. That is EPS and free cash flow per share. But look at Perion Network. They have a market cap now of $400 million. Even before the dip, they were, just over $1 billion company, still a quite small company. We also have Bill Holdings, another one of my biggest losers. They're at all-time lows, or not all-time lows, but they have a market cap of $5 billion. It's still relatively small market cap, but we're down 32% on them. In my opinion, I find a lot of safety in the larger market caps. That's kind of what I've dedicated my Robinhood portfolio to. Every stock in here has a market cap of over $10 billion. My smallest market cap is actually this one, and it's $10 billion. But I'm always transparent. Check out the Robinhood portfolio. Here's how much equity I have in every single company. And let's see how they're all doing today. I'm surprised. Meta is actually at over $500 per share. Wow. I know a lot of people don't like this company. I'm only up 12% on my shares. I bought them at all-time highs. I also bought Google at all-time highs, and they went ex-dividend date today. For the first time ever, Google paid the first ever dividend today, which is pretty cool. I'll actually show you that. I don't remember how much. Oh, yeah, so it's 20 cents per share. So we'll do some math on this, calculate how much dividend income we're making from Google. So I own 7 shares, so 7 times 0.2, I'm getting $1.40 in dividends. So let's go. Remember, it's not a big check right now, but I literally think in a decade, in 10 years, my yield on cost, so my dividend yield based on today's prices, will be like 5 to 10% because they have so much room to raise the dividend in the future. Google's payout ratio today is like 5 to 10%, and that's assuming no growth on their net income, which is expected to grow double digits. Our Robinhood portfolio is actually up 25% year to date. I'm very grateful for that. That makes up for a lot of the losses in the Moomoo portfolio. Actually, the Moomoo portfolio total position profit and loss is only down $9, and that's because of Powell Industries. I love this holding right here. They're up 5% on the day, but we bought our shares right before earnings, and really ever since then, a couple of days after they reported earnings, I don't think it's ever going to go back to my cost basis. I really don't ever believe that I will be negative on my Powell Industries shares ever again. And remember, I forgot to mention, I will never sell a stock once I buy it, just in this portfolio only. So these shares of Perion Network, I'm not going to sell any of my shares. I actually bought a share of them today. If you notice down here, that's what these little buy indicators are. And you can see exactly where I bought it. I only bought one share. I didn't want to be too risky. I don't even want to add to Perion Network anymore because they're such a bad company. I really want to add to Nike some more. I love this brand. I love this company. They're basically at the 2019, 2018 level, but they have a huge deal with Caitlin Clark. She's getting her own shoe, and it is just crazy popular right now. They have an 8-year deal agreement. Nike got a steal on Caitlin Clark with their contract. It was worth around $30 million. It's worth, I'm guessing, double to triple that now with how famous she's gotten just over the past couple months, which is kind of crazy. But let's actually head over to my Webull watch list because I want to go over some stocks that I think you guys should know about. Yeah, Robinhood stock. I don't believe it. They have such good news coming for them, like their Robinhood Gold credit card, their Roth IRA retirement match. And I forgot to share with you guys this. I actually just started a Roth IRA inside Robinhood, and I don't have Robinhood Gold, but check this out. Even though I don't have Robinhood Gold, check this out. They still match you 1%. So I deposited $22, so they matched me 23 cents, or I'll just say I deposited $23 and they matched me 23 cents. And that's what I love about Robinhood. I definitely think this company deserves, going back to, IPO prices. This stock is well below its IPO price of $30, but I've actually been holding the bag on this stock. If you don't know, I was buying my shares. Look way back here. This is when I was buying my Robinhood shares in 2022, April of 2022, which is well over 2 years ago. So I've been holding onto my Robinhood shares for a very long time, and it finally paid off. And I'm hoping the same story will be true for Perion Network and Bill Holdings. I'll buy them while they're in the gutter for a couple years, and I hold them on for 2 to 3 years. When the bad news kind of fades away and they start making more money, hopefully we see that kind of recovery with these stocks. Remember, none of this is financial advice. Do your own research, and if you're liking this video, make sure you hit the like button. It would really help me out a lot. And I have some other news about a stock that I own, and that's actually DocuSign. We're up 20% on our shares, but check this out. They reported earnings and they fell instantly all the way down to $48. But then they recovered to 53 and they're now at 51. So I think investors are realizing that DocuSign earnings were not that bad. I now own 10 shares of the company, but I wanted to show you the actual earnings because I thought they were really, really good. Here's their EPS, and their EPS is the same as their net income. It's just the net income per share, but I like to look at the free cash flow per share. Check this out. It was actually up 7.79% after being up 17% the year before. But if we scroll down here, we can see the actual free cash flow that they're making the past 4 quarters. As you can see, I think this is over $1 billion of free cash flow in the past year. This is very impressive, and that's the highest it's ever been. And I also wanted to show you their balance sheet, which is very, very impressive. Well, last year it was 76% assets to liabilities ratio. Now it's 61%. And a lot of people saw that their assets went down from 3 billion to, under 3 billion now. That's because they just paid off a ton of their liabilities with their assets. I'll show you exactly what I mean by that. So if we go to their total debt, check this out. A couple quarters ago, they had $700 million of debt. And now they're completely debt free. They actually just paid off all of their debt. Oh yeah, here's their diluted normalized EPS. This is what you do a multiple on. So if you wanted to do a PE ratio, this is what you take, but you don't really use these numbers. You would want to do a forward PE ratio. Yeah, so remember, DocuSign right now, this is so crazy, has $817 million of cash. And why did it drop from that $1.2 billion? That's because they paid off all of their debt. And what did they do? They actually bought $123 billion worth of their own stock back. So they have $800 million after buying back $100 million worth of their stock, which is basically that is the most amount of stock they've ever bought back. That's actually crazy. So they're actually now dedicated to returning money to the shareholder through stock buybacks. So that's why you've literally only been diluted 1.18% year over year. And for a tech stock, that's very impressive. Oh yeah, remember how they had $800 million of cash? That cash made them $14 million in interest. So that's all, pure free cash flow. They don't have any debt. They're not paying interest. They're making interest because of the high interest rate environment. You see, that's the same with Apple and the Magnificent Seven. That's the thing. They're taking the interest because they don't have much debt. So the interest on their cash outweighs the interest from their debt payments. Well, anyway, hope you guys found some value out of this video. If you did, don't forget to hit the subscribe button or leave a comment. I'll actually respond to every single one of the comments. And I hope you guys have a fantastic rest of your day. It's only Monday. We got a lot of days left in the trading week, so have fun out there.